Hey there, Ed McCormack here, founder of the crypto education platform, Dchained. In today's video, we're going to address the elephant in the room, which is what the hell happened with the crypto market over the last week. If you've been following, crypto prices, currencies like Bitcoin and Ethereum saw pullbacks of 20 to 30% plus just in the 7-day period. And there were a few things that led this pretty dramatic volatility to occur. And we're going to talk about that now. So the first factor that really drove a lot of investors to pull their money out was ultimately the decision by China to ban cryptocurrency. Now, I'm going to put an asterisk on this for a second, but let's take a quick glimpse into history of sort of China's efforts to limit the growth of cryptocurrency. So dating back to 2013, China started to implement a lot of heavy restrictions around blockchain technology. It goes without saying that China really sort of centers themselves on controlling information flow and ultimately the way that citizens could interact with each other and the outside world. And China really focused in on limiting anything that decentralized that power away from them. Skip ahead to 2017, and they decided to put a ban on cryptocurrency, given the fact that they thought that ICOs were too speculative and ultimately could create financial distress in their country. And to an extent, they were right, and it was a really good move. But the fact is that China really never saw it through, because at the end of the day, when you look at where Bitcoin mining happens, 2/3 of it happen in China. So there's a lot of revenue and a lot of profits to be made for the Chinese government, and they've sort of looked the other way and also were unofficial sponsors for Bitcoin mining. Now today, if you look at sort of the situation that we're facing, China is really focused in on trying to get that economic stability post COVID-19 in the last year and a half. And across those efforts, they have identified cryptocurrency as a potential speculative asset that could really undermine those efforts. So what's happened is you've had now a number of different government-sponsored agencies that have come out and not only said that cryptocurrency, specifically Bitcoin, is not a real currency, but it is absolutely banned for day-to-day purchases. Now, with that being said, I'm sure that there are some political underminings here, given the fact that most Asian exchanges are based out of either Singapore or Hong Kong, which for the latter, there are certainly some geopolitical factors that are at play here. So needless to say, this is not China's first rodeo in terms of putting restrictions and limits. And the fact is that it's also something that they really haven't held up too well. And the timing on it is also a little suspicious, given the fact that in the last week, the U.S. Department of Justice has also filed an investigation into Binance, which is one of the largest Asian exchanges and also run by Canadian Chinese citizen CZ. So again, take everything into consideration, because there could be a lot more at play here, leading China to ultimately posture up in something that they really have no intention to really follow through. So stay tuned on that. The second driving factor that's happened over the last week is really the awareness around sort of how inefficient mining is when creating cryptocurrency. Now, for those of you who might not be familiar with mining is essentially the process where you have computer systems that will solve a very complex algorithm in order to be able to validate a transaction and add it to the blockchain. So think of it this way. Imagine that your computer was tied to a web of accountants. And when you make a purchase, that purchase is ultimately being sent to all of those accountants who are going to fight to ultimately get their hands on it first, record it on the blockchain, and push it out to everyone else. And the winner who does all of that will ultimately get a prize, which in this case, Bitcoin. Now, the problem with this is that, for one, this is it's incredibly slow. This is really where sort of Bitcoin's downfall happens, because it's bottleneck that it creates because of the fact that you have to wait for these transactions almost one at a time to be added to the blockchain, ultimately really limits the scalability of Bitcoin's blockchain. And that's part of the reason you really don't hear too much about Bitcoin as a blockchain, mostly as a store of value. The other area that is getting a lot of attention, this is really where sort of the environmentalists are placing a lot of their attention, is the fact that in order to solve these complex equations, you need these supercomputers that guzzle insane amounts of energy. Now, again, I'm not taking a environmental or anti-environmental stance here. I'm just talking facts. But if you think about and you actually look at where most of these Bitcoin mining operations are, they're usually around natural resource sources. So, for instance, we spoke about a moment ago how China has these really big mining facilities in China. And if you look at where they are, they're usually around these hydroelectric dams. And the reason they're there is that in many instances, there's only so much electricity that these governments or these states are able to send without really the electricity getting diluted where it's useless. So what they'll do is that they will enable these organizations, in this case, Bitcoin mining factories, to set shop right next to their plant, and they'll allocate a certain percentage of electricity to these factories. In another sense, it's essentially saying this: we can't actually send all of this electricity far distances for it to be used by everyone around the country because of limitations around how far electricity can travel. So either we're going to waste it, and it's essentially nothing's going to be made of this electricity, so you're still producing it, but no one's using it, or we can actually use it for commercial purposes. Now, with that being said, the process of mining is incredibly inefficient, and fortunately, for those of you who look at Ethereum and potentially identify different investments on their blockchain, Ethereum is set to have a massive upgrade in July as they move from the mining process to proof of stake. And watch some of my other videos that talk about staking, but essentially it's moving from these miners having to exhaust a tremendous amount of electricity to solve math equations to essentially these groupings now that you and I can participate in that will essentially use your Ether as collateral to initiate this software on the blockchain to then validate more transactions. It will scale everything significantly more, reduce your transactions, and of course, it'll be much better for the environment. And the third driving factor that I want to talk about here is in the US. And a lot of attention sort of being driven now by some of the things being said by the IRS and the Department of Justice. So a few years ago, Bitcoin made the headlines because the IRS released these stats that said that only a fraction of 1% of cryptocurrency holders in the United States actually reported their virtual currency holdings for tax purposes. So what happened was last year, so in the 2019 filing, what the IRS decided to do was on page 1 of your 1040, it's Schedule 1, they asked very explicitly, do you hold virtual currency? And it's a little bit of a Trojan horse question, because if you said yes, and hopefully you did, you will then go and proceed to file your taxes based upon your capital gains, your losses, etc. If you hit no, well, hopefully you didn't select no again this year, and if you do own cryptocurrency, because ultimately the IRS has their sights set on identifying those who are dodging taxes that are owed to them, and ultimately taking the steps of chasing those down. Something that they did about 10 years ago with people who had these offshore bank accounts and didn't disclose all of the assets that they held offshore. the long arm of the IRS will reach out and get you eventually. So what I think a lot of investors were a little bit jittery about, especially with the first two things I just talked about, was sort of the aggressiveness of the IRS to say, we are going to pay attention to people who are evading taxes. And the tax day this year was only a few days ago, so it was in mid-May rather than mid-April. And ultimately, anytime the IRS talks about being more aggressive and more proactive on finding people who are evading taxes, people get a little spooked. And of course, expect that the IRS and overall the Treasury is going to start to look at enforcing stricter limitations on these cryptocurrency exchanges and banks who are getting transfers from the crypto world. So just like when you deposit over $10,000, you generally have to show some type of identification to show that these funds were acquired illegally. You'll probably need to do that as well with cryptocurrency. But again, this should not catch people by surprise because you should be doing it anyway. So long and short, this was an eventful week to say the least. I think it's an understatement. But the fact is that the news that came out, if they were just by themselves, don't think it would create much of an impact at all. But the fact that when you add big policies that are being announced by China, combined with everything that is now coming out around sort of the underbelly of cryptocurrency mining, which is being rectified in only a few months on Ethereum, combined with the IRS around this year's tax day coming out talking about really honing in on trying to find those who are evading taxes, it ultimately had a compound effect. And the fact is, there's a lot of really exciting upgrades, announcements, launches coming in the following weeks and months in the cryptocurrency space. So there's a lot to be excited about. And I urge you just to be safe, be prudent with your investments over the coming weeks, especially as we have such volatility. And please, if you like this video, give it a big thumbs up, subscribe, check out all of the stuff that we're putting out on Dchained, including analysis, POV. It's really there to help you out, give you sort of that North Star to get through all this volatility. And ultimately, we'll see each other on the other side when the bull market starts again. So thank you again for watching and happy investing.